morning and welcome to Market Cafe. You're on ET now with me, Lisa Fernandez, and with me I have my colleague Snehi Shah. Good morning, Snehi.
Good morning, Lisa.
And during the course of the next 1 hour, we take you through all that's trending on the international front as well as the domestic front. Going to Snehi, who has tracked the US and the international market. Coming to you, Snehi, but first tell us whether you celebrated last evening on the back of India's win.
Oh, absolutely, Lisa. What a crazy win that was, right? I think we've set the highest ever record for the gap in which we have beat Pakistan by 228 runs. That would mean that even if Kohli and KL Rahul did not hit their centuries, we would have won anyway. But well, the rain was in our favor and the luck was in our favor as well. And what a close match, what a fun match.
I know you're an avid cricket fan, but
I
now
love
let's
cricket,
go get back to the market.
Absolutely. Let's talk about what the US markets did in trade yesterday then. And stock futures ticked down Monday night as investors come off a positive day. Now the moves following a winning day on Wall Street. The Nasdaq Composite led the three indices with a gain of 1.1%, while the S&P 500 and Dow added about 0.7 and 0.3% respectively. Now, it was the second positive session for the S&P 500 and Nasdaq and the third for the Dow. Now, let's look at some movers and what has led to this positivity on Wall Street yesterday. Oracle slid 9% in extended trading after missing revenue expectations of analysts surveyed by LSEG, but the database software company beat Wall Street's consensus estimate for earnings. On the other hand, you had a big mover. Tesla climbed about 10% in the session following a bullish Morgan Stanley upgrade. Qualcomm added nearly 4% after the semiconductor maker announced it will supply 5G modems for Apple smartphones through 2026. And a gain of more than 1% also came in for Walt Disney, and all of this has given the Dow an upward momentum. Now, when it comes to data, then investors will watch out for Tuesday or data for small businesses, but much attention is focused on key inflation data that's due later this week, with the consumer price index as a CPI expected on Wednesday and the producer price index or PPI slated for Thursday. Both of these data points come ahead of the Fed Reserve's policy meeting next week, so all eyes will also be on that as well. Traders are pricing in roughly a 4 in 10 chance, that's a 40% chance of an increase in November after an anticipated pause in September, according to CME Group's Fed Watch tool. Now, the Wall Street Journal also reported Sunday that there was a consensus within the Fed to not hike rates this month. So, largely, this is what the handover looks like from Wall Street. Let's shift focus to European markets. Now, European stock markets closed higher on Monday as investors looked ahead to a busy week of economic data releases around the world. Now, the benchmark stock 600 index ended up with an uptick of 0.3%, pulling back from gains of 0.9%. That's almost 1% from the session earlier. And basic resources rose 2.4%. The stock 600 on Friday broke a 7-session losing streak. So that's some sigh of relief coming in for Europe, and it's longest since February 2018. In Europe, investors are gearing up for the European Central Bank's next rate decision, which is due on Thursday. Now, the market is pricing in a roughly 40% chance that the central bank will hike 25 bips to 4%, but economists predict it will be a close call. This is what Reuters has reported. So largely, this is the handover coming in globally. Positivity seen in the US markets, mixed for the European markets. But this is on the equity front. Lisa, why don't you take us through what crude and other commodities have done?
Well, yes, thank you, Snehi, for taking us through the US market and the European market. But moving on to the crude and as well as the commodity check, the crude prices were largely unchanged, and this is the Brent crude is holding at $90 per barrel. This is after they touched a high after output cuts from Saudi Arabia as well as Russia last week. And this also comes ahead of the monthly oil forecast. US crude inventories, they are expected to fall for the 5th week in a row by about 2 million barrels. And the crude supply could also see some disruption. This is on the back of powerful storms in eastern Libya. And Europe is also expecting a light refinery maintenance season this autumn, as refiners, they are looking to profit from higher margin, which could support the crude demand. So if I look at crude prices, currently the WTI crude is at around $87 per barrel. It's trading flat, and even Brent is, like I said, it's still unchanged at $90 per barrel. If I go to gold prices, Gold is at $1,944 per ounce, and this is as the dollar dipped on the back of US inflation test, which is ahead this week on Thursday as well as Friday. The CPI data as well as the PPI data will be out. So that's on the commodity as well as the gold check.
Lisa, now let's look at some cues that you should be keeping on your radar this morning. And while we also spoke about the US CPI and PPI data, today the India industrial production, that's the IIP data, will be out along with India's CPI data. So key figure to watch out for. On the global front then, you've got UK jobless claims data that will be coming out today. So keep an eye out on that as well. Let's look at Dalal Street then and the annual general meetings that will be happening today. We've got a bunch of them. It's got 197 Communications, which is Paytm, Dr. Lal Path Labs, as well as Power Finance Corp, which is PFC. So 3 companies will be holding their annual general meetings today. When it comes to the primary markets, in terms of the IPO action, today is the last day to subscribe to the EMS IPO. So watch out for that one as well. On the corporate action front then, transformers and rectifiers, the board will be meeting to consider fundraising. And when it comes to the other events, then the Apple Wanderlust 2023 event may be happening today. And key thing to remember is that it is highly anticipated that Apple might be launching its iPhone 15 today. So interesting stuff coming in on Apple. So keep an eye out for all of these cues.
Well, now on to some global cues. Starting off with some key commentary, JP Morgan chief Jamie Dimon, he said that it's a huge mistake to think that the US economy will boom amidst several key risks on the likes of central banks reigning in liquidity, Ukraine war and others. He also adds that strong consumer spending is giving a false sense of security. A recession is eventually going to come, which will lead to a real normal credit cycle, and something will do worse than expected.
Summit, US President Joe Biden stopped at Vietnam for a meeting with executives of major firms across industries, including semiconductors, tech, as well as aviation. He unveiled deals including the Vietnam Airlines purchase of 50 Boeing 737 MAX jets worth $8 billion. The White House also announced plans by Microsoft to make a generative AI-based solution tailored for Vietnam and emerging markets. Nvidia will also partner with Vietnam's FPT Retail and Win Group on AI in the country.
And now shifting gears to some global earnings, software giant Oracle reported its Q1 numbers while missing the revenue street estimates due to a tough economic environment, leading to cloud spending by businesses, following which the stock tanked around 9% during the trade. Meanwhile, during the conference call, the management forecasted a better Q2 earnings with a revenue growth of 5 to 7%.
Well, staying with earnings then, Tesla shares soared over 10% on Monday after a Morgan Stanley upgrade and an optimistic note that envisioned that the company is selling AI technology to other automakers and saving money by using its own GPUs. Meanwhile, Morgan Stanley argued that Tesla should be viewed as a tech company as much as an electric car maker.
Qualcomm shares gained more than 4% after the chipmaker said that it would continue to provide 5G modems for Apple smartphones throughout 2026 as the iPhone maker pushes back plans for in-house production. Remember, it's the latest win for Qualcomm Snapdragon segment, which announced several automotive industry partnerships just last week. Along with India's win, there was another celebration with the Nifty touching 20,000 record high. My colleague Ajay Sharma is here to break down all the market action on the factors that led to Nifty touching 20,000. Listen in.
Well, that's correct. Nifty did hit the 20,000 mark, fresh lifetime high. There was definitely a lot of celebration on the street. But if you look at the numbers and you look at the data a little more objectively, the trailing Nifty valuation now is nudging the 23 times mark. Even if you take a look at some of the estimates from the street, Even 1 year forward, Nifty is closer to 20 times, which may not be very cheap right now. So you need to be a little bit cautious as well. The 20,000 mark, which got hit, the leadership came in by the likes of Reliance Industries, which hasn't really moved, HDFC Bank, which has just started moving, and a lot of PSU banks, which have not done very much as far as the index components are concerned. So even if you look at the aggregate, may have hit 20,000 mark, but many index components, including RIL and HDFC, have not really moved a whole lot, and that is why the strength of the market is very clear. And most of the strategists are also saying that this rally may very well continue even from current levels. So even if you are wanting to enter fresh in this market, be wary of the valuations. In the meanwhile, Nifty hitting 20,000 mark, the small cap and the mid cap end of the market is already hovering at fresh lifetime. That is where some areas of the market, certain market pockets of the market are turning frothy. This leadership in the market actually is also coming on two factors. One, domestic flows are very strong. Just today, the SIP data came in, nudging the 16,000 crore a month mark, which is a fresh lifetime high, but also because index future long position has started coming back, which was lacking in the market. These are the two big elements. If you look at the bigger picture, we are just out of the G20 summit, where big investments is likely to happen. India is likely to participate in that. A new summit or sorts, a meeting between Saudi Arabia and India is already happening. So the sense is that economic momentum in India would likely to continue, not only continue, but a large part of Indian PSUs may look at export or foreign opportunities as well. So there is a sense of exuberance in the market, but it's important to look at valuations right now and also the earnings quality. So if you are looking at entering the market afresh, then be wary of valuations, look at the earnings profile and earnings momentum, but otherwise keep on your SIPs on. The momentum is strong and market is only edging higher. But if you are riding stocks which are 40, 50 times, 70 times forward, be careful. This may not be the time to make fresh purchases very aggressively in stocks which are stretched on the valuations front.
Absolutely, Ajay. Thanks so much for taking our viewers through that. But meanwhile, celebrations erupted at the NSE on this momentous occasion, and ET now caught up with NSE MD and CEO Ashish Kumar Chauhan to understand the mood and understand the journey from this milestone to the next. Listen in to what he had to say.
When I created Nifty in 1996 with a base of November 95, November 3 is when, on 94 is when NSE started working first time on equities, and November 395 was capped as a base for 1,000, and now it's 20,000. So 20 times returns over 27 years is a phenomenal number by any stretch of imagination, and no other country, I think, has even in dollar terms given such returns. If you add the dividends and other things, probably it would be even higher to probably 20,000, which is what we call total returns index. But ultimately, this is what we do is reflect India's progress, right? The Nifty on its own you can't even figure out what it is. It's made of 50 companies, the top 50 companies, and some of them go out, some of them come in. But it shows India's collective progress over next.
And with that, let's slip into a short break. More news and updates on the other side of the break. So stay tuned on the show.
Hi there, welcome back and thanks for staying tuned to Market Cafe. This is ET Now. Now let's take a look at the cement channel checks conducted by Nomura and B&K Securities. Cement prices have been hiked for the second time in September for the eastern region, and my colleague Somit is here with all those details. Somit, take it away.
Yet another price hike that we are seeing in the eastern region now. The channel checks suggested by Nomura and B&K Securities are suggesting that in the eastern region there has been yet another price hike of around 35 rupees per bag. Now this is the second price hike that we have seen alone in the month of September, and these new prices will be effective from today. Now the total price hike taken in the month of September stand at around 70 rupees per bag, and channel checks are suggesting that the majority of the price hike that was announced earlier has been completely absorbed, and hence another round of price hike has been announced. But channel checks are also suggesting that the demand continues to remain a bit sluggish in the eastern region. Now, for Kolkata region, the channel checks are suggesting that demand from housing and central government's project has been resilient, but the drag has been from the state government's demand that has been lagging since the last state elections as per dealers. In Orissa market, what the dealers are suggesting that the prices now in the Odisha region is the highest in on pan-India basis at around 435 rupees per bag. Now, though August was historically better according to channel checks, price hikes could lead to a delay, especially coming in from the consumption from the housing segment. When it comes to the Patna market, dealers are suggesting that there was strong demand in the month of August, hence another price hike was taken also in the month of September. But going forward, they are expecting some slowdown in the month of September, given that the prices have now been increased by around 70 rupees per bag. When it comes to the Chhattisgarh region, dealers are suggesting that the price hike has not been supported by demand, and this could further worsen the demand going forward, especially in the Chhattisgarh region. Now, the companies that would stand to benefit, naturally Ambuja and Ultratech would benefit given that they have a pan-India presence. But apart from that, there are some companies that are east focused like Star Cement, Nuvoco Vistas, Heidelberg Cement, Dalmia Bharat. These companies have larger capacity on the eastern region, and hence these companies would stand to benefit a bit more than other companies.
Thank you, Somit. We'll definitely keep an eye on the cement stocks. But global investment firm KKR will be making a second round of investments in Reliance Retail Ventures Limited, and they'll be investing around 2,000 crore rupees for 0.25% stake. So give us more details on that, Somit.
Well, this is KKR's yet another investment in a Reliance Group company. In Reliance Retail, this is the second investment that KKR has done. Now, they are looking to invest close to 2,070 odd crore rupees in Reliance Retail Ventures for around 0.25% stake, and post this in a fund infusion, KKR's holding in Reliance Retail Venture would increase to 1.42% from 1.17%. Now, earlier KKR had bought around 1.17% in RRVL in 2020 for around 5,550 odd crore rupees. Now, KKR, do remember, also has a holding in Jio Platform, which is the telecom arm of Reliance Industries, and they own around 2.3% stake, and they had invested close to 11,400 odd crore rupees in Jio Platforms back then. Now, RRVL is the retail arm of Reliance Industries, and the fund raise has been done at a valuation of close to 8.3 to 8.4 lakh crore rupees, which is largely at par with what the brokerages were assigning Reliance Retail, and also at par with what QI had invested. Now, a few days back, QI had announced an investment of close to 8,300 crore rupees for a 1% stake, and in the second round so far, Reliance Industries has managed to raise close to 10,300 crore rupees in Reliance Retail Ventures by diluting only 1.24% stake. Now, the first round had valued Reliance Retail Ventures back in 2020 at close to 4.68 lakh crore rupees, and the current round of investment is valuing Reliance Retail at a value of close to 8.3 lakh crore rupees. That is a hike of around 58% in dollar terms. So keep an eye out for Reliance Industries in trade.
Absolutely, Swami, we will be keeping an eye out on Reliance Industries, but stay on with us, because as Nifty has scaled new highs and has touched that 20,000 level for the very first time, you have a list of stocks that have the return potential of over 20% in 12 months. So, Swami, take our viewers through all those details.
Well, despite the fact that markets are at an all-time high, not only the benchmark but also the broader indices, from March lows, Nifty 50 has climbed up around 18%, and the broader market, that is mid-cap and the small-cap indices, are up around 40 to 49% from their March lows. Now, despite this run-up that we have seen in the broader and the entire market, there are 11 such stocks that could still give more than 20% return over the next 12 months. The first on the list is UPL, which is expected to give a return of around 25%, and this is on the back of a possible recovery that analysts are expecting in the third quarter, and they're also seeing visible signs of reducing inventories and stabilizing prices. Now, out of this 11 stocks that we have culled out from the Bloomberg terminal, 7 of them are banking stocks, and the reason behind this could be the limited impact of incremental cash reserve ratio, given the fact that Kotak Mahindra Bank and HDFC Bank saw single-digit gains so far from their March lows. Strong credit cycle and benign asset quality could be the major reasons behind banks coming up on the top of the list. Apart from that, there is Greenply Industries. Now, the stock had underperformed because that company was expected to be the most impacted because of the military coup that we had seen in Gabon. The company has around 10% of its capacity and 19% of capital employed in Gabon region, but analysts believe that this is transitionary. GSPL is likely to benefit on the back of higher transmission volume and high gas demand in the country. And lastly, BPCL is also featuring in that 11 stocks because of cheap valuations. Impact in marketing business expected to be transitionary by analysts, and given the fact that refining margins are stable and fuel demand also continues to remain strong in the country.
Thank you, Somit, for taking us through that. So do keep an eye on those stocks that will give a return potential of more than 20%. But now moving on to Bajaj Finance, they are betting big on new car financing business. The company will soon venture into financing four-wheelers. ET now learns that the company has tied up with Maruti Suzuki and Honda for this and may soon announce more partnership. Ankur Mishra has more details on this. Over to you, Ankur.
Yes, Bajaj Finance is betting big on new car financing business. In fact, we understand that there has been tie-ups which has been made with car companies. Maruti Suzuki as well as Honda Cars has held partnership with Bajaj Finance, and this is for financing of new cars. We also understand that these kind of partnership may continue in future because the company wants to scale up new car financing business. The company also wants to scale up and venture into the new business of microfinance as well as tractor financing. Now, as far as the new car financing is concerned, we understand that the company will provide car loans of up to rupees 5 crore to customer, and these will be tailor-made solutions for the customer. The company will leverage on the technology front, and it will also offer flexi pay scheme to the customers, those who needs it. Apart from that, the company overall wants to increase its presence in cities, and if you talk about the market share, which is currently under 2%, the company wants to increase, in fact double it in next 4 to 5 years to around 4%.
Well, thanks, Ankur, for all those details. Let's going to move on then. And commenting on the entry of Jio Finance in the financial sector, Bajaj Finserv CMD Sanjeev Bajaj downplayed concerns of increasing competition. In fact, he said India needs many more financial companies. Listen into his take on this.
Well, we know nothing about Jio's plans, and hence very difficult to comment on that. But they have a large base of customers. They have tremendous technology and digital strengths. And maybe we have an overlap of some customers. We are ourselves there financing in some of their stores. It's a very small percentage of business for us, but we are there. I believe that there will be opportunities to collaborate, there will be opportunities to compete, but India needs 10 more Bajaj Finances. We need 10 more HDFC banks. In 2001, there were 5 insurance companies, all government owned. The total market was 20,000 crores. That was the annual insurance premium. That market in 20 years, with now 60 players and the insurance regulator wanting to open up to even more, but 60 players has taken that market from 20,000 crores annual premium in 2001 up 50 times in 20 years. That is what competition does.
And in a significant development, RBI has given its nod for the reappointment of Sandeep Bakshi as the managing director as well as the CEO of ICICI Bank, which is the country's second largest private sector bank. Now, this approval, effective from 4th October, extends his tenure for 3 more years until 3rd October 2026, and Mr. Bakshi, with a remarkable 36-year journey within the ICICI Group, has been at the helm of ICICI Bank since October 2018.
Well, with that, ICICI Bank will be a stock to watch out for today, but let's get a move on. And Saudi Arabia's Investment Minister Khalid A. Al Falih spoke about how Middle East and Africa offer significant opportunities for Indian companies to leverage Saudi Arabia as a gateway to access large markets that are eager to supply energy and green metals. Listen in.
Arabia to be the platform to serve the region for sure, the Middle East, Africa, Western Asia, and we think Indian companies should be taking advantage of what Saudi Arabia is offering them to reach these large markets that are looking to be supplied with technology, with green metals, with petrochemicals, with processed foods that could be done. Likewise, India has almost everything going for it: the demographics, the location, the vision, attractiveness to do business. We've seen the reforms undertaken by Prime Minister Modi. The rest of the world is looking at both these nations. And I think the announcement of this economic corridor linking India through the Middle East, primarily Saudi Arabia and the UAE, but also Oman and other nations.
Well, significant opportunities coming in from India, from the rest of the world. But shifting focus now, Union Minister Piyush Goyal, he spoke about the relationship between Saudi Arabia and India, which is indeed deep-rooted, spanning thousands of years. Now, this strategic partnership is highly valuable to both the countries. Listen in.
The relationship between Saudi Arabia and India is one between two brothers. It's a relationship that goes down thousands of years. And today, at the first meeting of the Strategic Partnership Council, both leaders, His Royal Highness the Crown Prince and the Prime Minister of Bharat, have both collectively decided that we are going to make this one of the most defining relationships. This strategic partnership is very valuable to both countries. We have identified several areas, be it healthcare, be it areas like tourism. I mentioned about the film industry and how we can work together to expand cultural exchanges between the two countries and tourism. Apart, of course, from newer areas like space technology, greater degree of investments, the new bridge that has been created, the India, Middle East, West Asia, Europe bridge, which will connect large parts of the world, will help make logistics more affordable, will help it make it easier to transport goods and services, will help connect nations for renewable energy grids, for digital connectivity. The potential is immense. It's our moment under the sun. It's our time. Saudi Arabia and India are committed to grabbing every opportunity that comes our way.
So you mentioned a very important point about establishing an office in gift cities so that they can invest in startups, which is very, very crucial and critical for the government and entrepreneurs.
Well, Saudi Arabia and India have agreed to have a startup bridge between the two countries to encourage young boys and girls and entrepreneurs and innovators in both countries. And we can help with mentoring, we can help with capital.
All right, that's the word coming in from Union Minister Piyush Goyal. But with that, let's quickly slip into a very short break. On the other side, when we come back, we'll tell you about the FNO setup for today and all the stocks that you should be keeping on your radar.
Welcome back to the show, and we have Ansh here with us who will take us through the FNO snapshot. Good morning, Ansh. Take us through the FNO snapshot.
Good morning. So in the previous session, Nifty gave a decisive breakout from 19,850 resistance to touch the historic 20,000 mark for the first time. It took nearly 51 sessions for index to climb from 19,000 mark to 20,000 mark. Now let's see what happened in FNO segment. Surprisingly, short covering was seen in Nifty futures and not long build-up, with OI dropping by around 0.5%. This keeps the sentiment neutral. Whereas on option front, we saw call buying at 20,100 strike, whereas good put writing at 19,900 strike. This indicates that option traders are expecting Nifty to climb over 20,100 strike and take good support at 19,900 on downside. Also, there are chances that Nifty may also slip below 19,800. There also we have a very strong support if it goes below that level. Now let's shift our focus to what FIS did. Index future, they added 8,300 long contracts, because of which we see FI total long position jumping from 58% to 60%. So in a nutshell, FNO data seems flattish and not very strong indications coming here from this data. On charts too, Nifty looks good till 19,850 level stays protected on downside on closing basis.
Well, absolutely, Ansh. We hope all of those levels stay intact and Nifty continues the rally that we saw in the market yesterday. But amid all of this uptick coming in the Nifty, what stocks should our viewers be keeping on their radar for this morning?
Sure. So Lupin will be the first stock in focus for today's trading session as company plans to transfer 2 API manufacturing sites and select R&D operations to Lupin Manufacturing Solution, expecting to receive 7,500 to 8,500 million rupees. Apart from this, TVS supply chain will also be in focus as on year-on-year basis, results showed a 12.4% decrease in revenue from operations, but adjusted EBITDA shows increase of 7.3% with margins at 7.7%. Reliance Industry will also be in focus as KKR plans to invest nearly 2,070 crore in Reliance Retail. LG Equipment will also be in focus as company has signed a letter of intent with Siemens for supply and maintenance of air generation and aux compressors. Laurus Lab will also be in focus as company has approved acquisition of nearly 37,641 equity shares of Laurus Bio for 71 crore, increasing the stake to 87.58%. Lastly, Gufic Bioscience will be in focus as company received approval from TGA of Australia and Anvisa of Brazil for Paracoxib 40 mg injection. So keep an eye on the stocks.
Well, thank you, Ansh, for taking us through those list of stocks. We'll definitely keep an eye on that. But now let's look at the brokerages on HUL. Macquarie has conducted a channel check on HUL, and Vamakshi is here with all the details on what houses like UBS, BofA as well as Citi has mentioned in their notes.
Well, yes, definitely HUL is going to be on our radar today. We have several brokerage notes conducting a channel check on this counter. Now, what the channel checks roughly are indicating is the fact that the demand trends could in the second quarter could be similar as compared to the first quarter. Now, rural did see a positive volume growth during the second quarter, but on a 2-year CAGR basis, the volume trends still remain in the negative territory as far as the rural markets are concerned. But on the other hand, the urban demand continues to be quite good. Apart from that, when we talk about volume growth, now this is an important factor when it comes to FMCG companies. Volume growth is expected to be seen at nearly 3 to 4% on a sequential basis. Competitive intensity specifically from local players remains quite elevated in the mass segment, which includes tea, detergent baths, etc. But volume growth is quite buoyant across laundry, beauty as well as dishwashing, while for the food the volume remains quite muted. Now, dealers are definitely worried about a delayed festive season, which could in turn impact the volumes in September. Apart from that, realization is also expected to be flattish on a year-on-year basis. A marginal decline could also be expected, and this is as compared to a 3.5% year-on-year growth that the company had posted in the first quarter. Gross margin improvement is also likely, but this could be partly offset by higher ad spend. In overall, what they're expecting is a flattish year-on-year EBITDA margin, and in turn that could drive a nearly 3% growth as far as EBITDA is concerned. Now, all in all, given all these factors, Macquarie has maintained its outperform rating. Bank of America has maintained its buy rating, and Citi also has maintained its buy rating. But important to note that Bank of America and Citi both have gone ahead and cut their target price as far as HUL is concerned. So given all these factors, watch out for HUL.
Vamakshi for taking us through that. But while the Nifty has gained about 10% this year, the real party has been seen in the broader indices, which are more than 30% year to date. Now, is this rally justified, and is there a case for correction? Brokerages have very differing views on it. So let's go through it one by one. Kotak is saying that there is no meaningful change in the fundamentals of most of the companies. In fact, a lot of companies, their fundamentals have worsened, and according to them, not many stocks beyond BFSI has potential upside. Moving on to Elara Securities, they say that the strong flows may continue even if the peak is hit. Valuations are not cheap, but they see flows in the cheaper stocks on growth adjusted basis. And lastly, HSBC is of the view that the analysis of cycle according to them suggests that we are still midway in the rally, and the broader market bullish phases that can still last. But what remains the key risk are the rising crude as well as the food inflation prices. So that's on the broader market rally, which the brokerages are highlighting.
Alright, Lisa, thanks so much for taking us through that. We'll keep an eye out on the broader markets and see if the rally continues. But I'm afraid with that, we're completely out of time on this edition of Market Cafe. You don't go anywhere. The market takes all the action ahead.